Debt market. Financing mechanisms they negotiate debt titles obtain financed advantage fluctuation with loans of large amounts of money functions get financing purchases of titles classification on instruments federal governments CETES development bonus AMPs bonus saving protection institutions IPAP BPA BPAT Bank of Mexico monetary regulation bonds parastatal companies and public institutions stock certificates and bonds private companies commercial paper private obligation state and municipal government stock certificates how to buy open stock brokers contracts a bond or brokering house because they are of necessary to be valid the rights of a financial transactions markets primary markets public offerings of debt securities secondary market the price will depend on the supply and demand types and bonds to monetary discount vouchers bonds M's bonos stock certificates monetary regulation bonds.
Stock market. It is a market in which companies can issue receivables in order to fund financing. Investors who buy these receivables become shareholders of the company. What is an action? It is a portion of property of a company that is held by individual or group. This may entitle a shareholder to vote to speak at shareholders' meetings and give their holders rights over the profits of the company. The objective of the actions is to raise resources that invest in expanding their operations through equipment purchases, facilities, or hiring new staff. For the purchase of these shares, they use the stock exchange as an agent who helps companies to carry out these operations. The most important stock exchanges are from New York, Nasdaq, Tokyo, Shanghai, Hong Kong, London, and Euronext. The receivables are grouped in a stock index and follow the main actions of the sector of a country. The main index are Standard & Poor 500 Index, Nasdaq, Nikkei, Morgan Stanley Capital International. Prices depend on supply and demand, and thanks to the variation of this stock, can be used to speculate and invest. If the person speculates, seeks to take advantage of the movement of the price to obtain profits, and if the person invests, seeks to benefit from the company to which the shares belong and through the variations of its prices to obtain profits.
Derivatives market is an exchange of forward contracts that seek to cover the market risks of the asset in question. Underlying assets fixes a variable income instrument or even a physical asset. Taken over from the bullish markets in the 7th century, trading in derivatives contracts, modern market emerging in Chicago. Measurement standard set. Future set sold on a purchase price to be delivered and the future date. Option the buyer pays and acquires the right but not obligation. The seller is obligated to complete with the agreement. Swaps exchange on floats or position in different inventories and or currencies. Hedging against price fluctuation of the underlying assets. Liquidity stability depend. Interest rates, stock index, individual shares, currencies. Backup that offers and against compensations and settlement most significant progress in the development and internalization process on the Mexican financial system. The important macroeconomic stability and fiscal risk control.
Currency market. Add is now hard currency and forex. What it is the organizational market with which banks, business, and individuals buy and sell foreign currencies. Functions: transfer funds between countries, provide financial instruments and machines, and risk management and speculation. Participants: commercial banks. Commercial banks are intermediaries that allow the customer to buy or sell foreign currency. Central banks. Central banks are responsible for the issuance of the local currency and for the administration and control of the money supply. Non-financial corporations are the users on the foreign exchange market or those who, as a result of their commercial and financial operations, go to the exchange market to buy or to sell foreign currency. Regulate. It regulates foreign exchange.
Financial Stability Report, first semester 2019. As we know, Mexico has had multiple lows and highs in terms of its economy. Some of them were recoveries of the economic growth for the nation. However, there were also the crises by foreign financing, resulting in an economic imbalance. On the other hand, the bank credit increased, but there was a decrease in the credit of financing private companies. The household economy remained stable in the face of all the problems that arose. Regulatory capital growth was maintained, and a vision of having a space of portfolio growth. Some cyber and natural risks that could affect our economy were presented. However, strategies were developed that help us face them and be able to overcome them. The banking entities maintain high liquidity levels to be able to face the problems that arose. Lastly, the Mexican economy has had ups and downs, but always in search of overcoming the problems and improving the situation that arise.